It's Laura Radulovich with the Ferrari Home Group, and I'm joined today with Jason Harris with Guaranteed Rate. Hi, Jason.
Hey, Laura, how are you?
Hey, I'm good. Thanks so much for joining us today. Um, I kind of wanted to get started talking about why we're here. So we were talking yesterday about a situation that I have. Jason is one of our industry experts that we refer to for a lot of things. So even if you have not issued the pre-approval for one of our clients, I still call you when I have interesting situations that I want to run by you. And so this week I have a listing that the buyer who was approved for it before all the COVID-19 craziness is now not necessarily approved to purchase the property, and kind of we're trying to figure out some ways around that. So explain to me and explain to everybody that's listening kind of what has changed since all of this craziness has started.
Yeah, that's a great question, Laura. We have seen over the last 2 to 3 weeks quite a few changes to the lending guidelines. And the changes are not necessarily being driven by, for example, FHA, or being driven by Fannie Mae or Freddie Mac. Most of the changes are being driven on an individual lender level to ensure the quality of the loans that we're all doing. So we've seen, credit score requirements have changed. Historically, FHA loans, for example, have allowed as little as a 500 or a 580 credit score, depending upon the circumstances. And we've seen most lenders really tighten that up, whether it be a 620 credit score or even as high as a 680 credit score. The restrictions around credit score, as well as some considerations around debt to income ratio, the amount that they can actually qualify for, those are all changing right now. And they're changing really every day. We're seeing new things come out. So it's very possible someone qualified 3 weeks ago would have different circumstances today.
Okay. So what are you doing for the buyers that you're talking to, or to kind of prevent these surprises once we get a few days or a little bit before closing?
Yeah, we're really trying to work well on setting expectations. So, when we issue a pre-approval letter, we're very clear with the buyers if they are in one of those situations that's, kind of close, that may be subject to some changes, that, they keep us posted as they consider potential offers. We're trying to update our partners about any changes that may be coming, and then also make sure that you guys are staying in touch with us as you guys are writing offers for buyers out there, because it's really, there's not a firm answer that we can provide to guarantee that nobody's circumstances will be impacted by changes. But if we manage expectations well, we can do a lot better job of that.
Sure, that makes a lot of sense. And we always try to keep you posted with things as much as possible that we know of. So one of the questions I'm getting a lot from people right now is related to interest rates, which I'm always going to try to look at maybe a bright side of something. And with all this craziness, I think the brightest side has been lower interest rates. So I've had a lot of people ask me, are they going to keep getting lower? How long are they going to stay low? Maybe they weren't going to buy till the fall, but if they can now and take advantage of the lower rates, they would love to. So tell me a little bit about what you think.
Yeah, so that is definitely a great opportunity we're seeing right now. Interest rates are at, I tell folks, if you're looking at a 50-year chart, we're right at the bottom. So we're seeing rates at historically low levels. And, a lot of folks think that these rates will stick around for another 2 or 3 or 4 months. So I do not anticipate that rates will rise in the short term. And I do think right now, if you're stable in regards to your employment, if you have planned to purchase a home over the last 6 or 12 months, it is an absolutely fantastic time as far as affordability goes. We're able to qualify for more now. We're able to take advantage of lower payments. It's a fantastic time to buy with the rates where they're at right now.
Okay, so if I have a client that's under contract right now and they lock in their rate and the rates continue to go lower, talk to me a little bit about how that works. Sometimes it's hard for me to explain that to a client with how long a rate lock lasts, or if they continue to improving, did they just kind of did they not wait long enough since they're going to still go down? How does that work?
Yeah, we get that question quite a bit. It's and this policy will vary from lender to lender, but we do offer an opportunity if folks were to lock in and then subsequently see those interest rates drop between the time that they locked in and the date of their closing. We do offer a one-time opportunity to float down or to renegotiate that interest rate in order to achieve those more attractive terms. So right now, most folks at the time of application, we want them to get locked in to make sure if anything were to change that they don't lose these great interest rates. But if things do drop and improve before closing, we've got a chance that they can take advantage of that.
Okay, awesome. And just curious, are there any particular types of buyers that are really getting a good rate right now? I know that you recently issued a great VA pre-approval for some clients of mine, and their rate was really, really good.
Yeah, VA loans are something that we are especially aggressive in our pricing. We do offer zero lender fees. We're seeing 30-year fixed rates that start with a 2. So, the interest rates for veterans are especially attractive right now. And, as far as conventional loans, we are seeing great credit borrowers. If you've got a down payment and great credit, the opportunity to achieve a lower interest rate is really as good as it's ever been.
Awesome. Good to know. So looking ahead, I was not involved in real estate in 2008, so I haven't been around since there's been any really big shakeup. Positive and negatives, what do you think is the lasting effects on all of these changes and everything that's been going on?
Yeah, I expect that it'll change the way that that the real estate business and the mortgage business work. I think for home buyers right now, I think there's a need for stuff like this to be able to do these video meetings and to be able to operate in a virtual way. I think that what we're seeing now is just a sneak peek into what the industry would have looked like in 2, 3, 4, or 5 years. But the current circumstances are just speeding that process up. So we're at Guaranteed Rate excited to be able to offer a very automated loan process and really minimize that that necessary face-to-face or human interaction directly with each other, but still provide all the great insight and and service that we have historically done. So I think as far as the markets go, we're seeing this. I know talking with your team, that there's still a tremendous amount of competition for properties right now. There's a ton of buyers out there. I expect that will continue, especially at the kind of the lower end of the pricing spectrum. So if you think about homes that are under 350 or 400,000 in great school districts, we are seeing tremendous demand for those homes. And I think that's really a positive sign about where the market's going. I do not anticipate that we will experience things like we saw, as you mentioned back in 2008. We've started with a lot stronger footing in the economy, and I'm really optimistic.
That's awesome. Thanks for that. And I agree with the technology stuff that we are probably going to be here sooner or later anyway. And I know our team's always been as digital as we can be in terms of paperwork. And it was great. I had a buyer that was using you guys at the end of last week, and we had to do our first, or at least it was my first drive-through closing. Well, they had to awkwardly sit in their car, and I sat in a car next to them, but they had already pre-signed most of their paperwork with you guys because they did that. Now, what do you guys call it that you're doing now, some of the paperwork?
Yeah, that's our flash close. So we enable customers to sign about 90% of their closing documents in advance of the closing. The final 10% or so that require the notary stamps, they're signing those, in person, as you mentioned, often with a drive-by closing or, something else to maintain that social distance. We do envision, offering a fully automated or fully digital closing. We are working through those right now in kind of a pilot program and expect to roll that out in the short term.
Cool. Very cool. All right. Well, I'm not going to take up any more of your time. Thank you so much, Jason, for joining me today. I'm sure you've answered a lot of people's questions. And if anyone listening to this has any more, feel free to email me, laura@ferrarihomegroup.com, or you can get a hold of Jason at jason.harris@rate.com, and have a great rest of your week. Thanks, Jason.
Thank you so much, Laura. Bye-bye.